The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time for our live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at $46,515. A bit of a pullback in 1.5% over the past 24 hours. And the CoinDesk Ether price ETX index is at 3240. ETH also declining about 1.2%. The new DFX CoinDesk's DeFi index is trading at 737. DeFi is declining about 2% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, and joining us now to discuss the crypto markets is Martin Gaspar, research analyst at crypto trading and investing firm CrossTower. Welcome, Martin. So here's what I want to hit you up with. We're seeing the sixth consecutive week of outflows out of crypto funds as of last week. It's the longest streak of outflows since January of 2018, according to a CoinShares report. We're seeing low volumes, yet the crypto markets are up, growing over $2 trillion in market cap again. Why is this happening?
Seems to be that, institutions are taking a step back from some of these products, as the CoinShares reports have indicated. But really, it's retail that's putting its foot on the gas and going back and accumulating Bitcoin, ETH, and other crypto. What I'm seeing on the on-chain data, it's really indicating addresses with smaller balances of Bitcoin. They continue to accumulate. So I really think we have this divergence where, some institutions may still be on the wait and see kind of path. Maybe they believe this rally is just a fake out. While retail has been, consistently buying, throughout the spring lull and June and July. So I think that kind of explains this divergence right now.
So Martin, speaking of that fake out, do you think that might have been, I don't want to say by design, but given that we do have this lowering of institutional interest, yet there were a few players who may have made a few big trades almost to spur that retail interest. Is that something you think happened here? Do you think that maybe this is really a FOMO rally on the part of retail, while institutions kind of maybe will end up selling into it?
I actually don't think so. I think it's just continued broader adoption of crypto. I think more and more investors, individual investors, are coming into the market. Just because there's broader information about it, and it's something they really believe in. We see that some forward-thinking, companies are also continuing to step into crypto. Like Walmart and Amazon, putting up job postings for digital currency or blockchain positions. So I think it's really just, those that are really interested in this space are continuing to march on. And to me, it seems right now that we're could be the calm before the storm in a bullish way. We continue to see, really in the last month and a half, Bitcoin's flowing out of exchanges. The hash rate has recovered very nicely. We're up almost 40% from the lows in early July. So, to me, that says that miners are coming back online from the China displacement, really removes uncertainty from the network. And one thing that's been especially positive to see are that active addresses are finally ticking up again. The 7-day Bitcoin active addresses are up roughly 10% in recent weeks. So I think all of a sudden, people are getting interested again in Bitcoin and crypto especially.
So we've heard a lot about Bitcoin recently, and also about Ether with the hard fork. What are some other coins that are kind of doing interesting things? I mean, there's a few that sort of stand out, like Solana or Cardano. Anything that's on your radar that people should be paying attention to?
Yeah, I think both of those are really the ones that everyone's looking at right now. Cardano is especially exciting. Kind of, they hinted that smart contracts could be coming in mid-September. And people in crypto, they especially love to see, these projects that have a lot of promise. So it remains to be seen how successful kind of the smart contracts on Cardano will go, what sort of applications it will attract. But investors love to see, this potential growth story. So I think that's kind of explaining the price movements there. With Solana, I think people are waking up that, there's, more blockchains than Ethereum out there. And some of these, yeah, they can be faster, and cheaper as well. So I think investors are right now understanding that there's broader, there's just a lot of room to grow between other blockchains, and especially how right now Ethereum is still kind of in this awkward position where we had EIP 1559. We're still below, we're still before the 2.0 kind of merging. Optimism and Arbitrum, the layer 2 scaling solutions, are still really taking their time with adoption. So I think investors are just starting to look at more and more coins.
Do you think that a lot of this movement off the exchanges is in the OTC market, where we can't keep track of what's happening on what's actually happening in terms of buying and selling of Bitcoin and other major currencies? Do you think that we're slowly but surely moving away from centralized exchanges in general?
Yeah, I think so. I mean, it's difficult to kind of quantify how much of the outflows could be attributed to OTC. One thing I have noticed is that, sort of the trackers behind it, something like Whale Alert, I've noticed that there hasn't been as much chatter about large outflows specifically, because I remember, during Q1 and partially in Q2 this year, that whenever there'd be a huge outflow of Bitcoins, potentially in the hundreds of millions, everyone would be, pointing it out. So I haven't really seen that recently. So for me, it kind of points that it's more individual investors doing that.
Do you think some of that outflow, as far as, as you were saying on Whale Alert, some of that Bitcoin outflow at least might be some concern over what's going on with Binance?
Yeah, I mean, possibly. I think, investors are always kind of concerned, about potential regulatory headwinds. And so sometimes, it could be in their best interest to kind of move their coins to other exchanges or to self-custody them. So I think that's definitely part of it.